All right, let's take a look back in history to October 3rd, 2008. That was the day President George W. Bush signed the Emergency Economic Stabilization Act, a sweeping piece of legislation designed to inject capital into a reeling U.S. financial system. Now, the legislation's centerpiece was the $700 billion Troubled Asset Relief Program, TARP. They used taxpayer money to hoover up billions of toxic debt held by banks, a clean sweep, a clean wipe of balance sheets that, in theory, would keep the banks solvent and encourage them to continue lending to consumers and businesses. It would be the biggest government intervention in markets since the Great Depression, and in hindsight, it would prove to be one of its biggest successes. Not only did it keep many financial companies solvent, but by 2014, the program actually turned a profit on the money spent. But it almost didn't happen. Yeah, there were dire warnings from economists and investors that without government action, the financial system was set to collapse. But Washington, well, that's a fickle and nonsensical beast when it wants to be. In a stunning vote of 205 to 228, just about 2 hours before markets were set to close on that drizzly Monday afternoon, the House of Representatives rejected that bailout program. Markets didn't take it well. The Dow average had its biggest point drop ever. The S&P 500 had its biggest percent drop since October 1987. The VIX spiked to 47. Two-year Treasury yields plunged more than 40 basis points, and oil dropped 10%. In money markets, overnight index swap rates, one of the best measures of credit risk, they rose to all-time highs. In fact, some say that the scariest day of the 2008 credit crisis, it wasn't the day that Bear Stearns collapsed on March 16th. It wasn't the day Lehman failed on September 15th, or even the day Washington Mutual failed on September 26th. It was September 29th when the House failed to do its duty and voted down that bailout package that President Bush himself had said was necessary to avoid a long and painful recession. Now, while Congress wasn't willing to listen to their president, they did take the message from financial markets, and they took it loud and clear. A slightly revised bill did finally pass the House on October 3rd, just before 1:30 p.m. while markets were still open, and it was rushed down Pennsylvania Avenue to the White House, where Bush signed the legislation less than 2 hours later.